Hey guys, it's Sasha. Tesla published their quarterly results last week, and I have gone and revised my valuation model. Although the results were better than expected, I have revised some of my assumptions down considerably, mostly on the energy side of the business. And this means that my long-term target price for Tesla has dropped a little bit and is now at $2,907 pre-split, which just happens to be $969 post-split. And I know, a bunch of you will be telling me that that is a ridiculous and absurd valuation, because that would make Tesla a $3 trillion company, which is 69 times more than all of the other car companies in the world combined, blah, blah, blah. And then there will be the other side of the room that will tell me that I don't understand Tesla. I am a hopeless bear because my valuation doesn't include Tesla humanoid robots replacing every single manual labor job in the world in 2023, and because I don't think Tesla will sell 420 million cars in 2030. In this video, I will walk you through what my valuation actually does have, share some of my insights, some of the reasons why my valuation has dropped after these earnings, and just before we go into all the details, remember, I am not your financial advisor. I'm just a random guy on YouTube sharing my thoughts. I don't own a crystal ball. I don't know what's going to happen. I don't know when, if ever, Tesla's share price will go to any particular number, so please take it for what it is. I'm just sharing my opinion. So let's jump right in. This is my Tesla model. I updated it about a week ago when the results came out and shared it in the Discord with my patrons and channel members. And let's start with the automotive assumptions. I've updated my manufactured year-to-date estimates on the right. This will become harder to do accurately in the future because we only get monthly data on production from China, so the rest will require some guesstimates to be made. And in here, I have updated my projections for new and existing factories. The way that this bottom-up model is built is it literally just goes and builds a rough map of when different factories for Tesla will produce what, when they will come online, and build a projection of what they're going to be making and then add it all up. That's what a bottom-up model does. A couple of important points in here. I've delayed the Cybertruck to start maybe in the second half of 2024, a bit later than when everyone's expecting it because of the issues that we're seeing with battery production and because of how much delay we've already seen, and the Semi to maybe at the start of 2025 or the very, very end of 2024 at best. In any case, it's going to ramp very slowly through 2025. And this is because the latest update on the earnings score confirmed that the ramp with mass production of the 4680 cells is slow. It is going much, much slower than expected. And every single month, we seem to be getting a worse and worse picture of how slow this ramp is. I'm sure they're going to solve it eventually, but it's just not happening for them just yet. Tesla have already switched Giga-Texas to use 2170 cells for the rest of this year because of these production issues. And a few days ago, Tesla announced a deal with Panasonic to build a giant battery factory in Kansas, which would make that factory the largest ever development project in Kansas. This new factory will build Tesla 4680 cells, and you would of course already know this if you read the Daily Upside, who are the sponsors of today's video. The Daily Upside is a completely free daily email newsletter which sends you updates and insight from the world of finance every morning. And other than being completely free to sign up, the great thing about the Daily Upside is that the stories are short, to the point, and easy to digest over 5 minutes while you're having your morning coffee. The articles are written by industry professionals with actual industry experience, and over 500,000 investors around the world get their daily investing news from the Daily Upside. The articles tend to focus on numbers and analysis and things like that instead of where and with whom Elon Musk spent last night, which means that you're reading useful content that might actually help instead of the drivel that we're used to seeing printed by the broadsheets. It is completely free. All you have to give them is your email address and you will get one super useful email full of key information once a day. Make sure you subscribe using my link in the description below. So in this model, my assumptions are that Fremont production stays roughly the same for the rest of this year and then grows by something like 10 to 20% over the next few years. I think that's very reasonable, if anything, maybe even somewhat conservative. Shanghai has just had a major upgrade to their production line along with Berlin at the beginning of July, and I'm expecting a much, much stronger half of the year after they've reopened, hitting around 230,000 cars a quarter. This quarter will probably be a little bit on the low side because they were shut down for 2.5 weeks, but then Q4 should look pretty good. Then that run rate continues into next year, and again, I've added about 20% improvement in a few years' time from even more optimization on top of these numbers. Giga Berlin and Giga Texas opened at roughly the same same time. Giga Berlin is a bit ahead because they started out making 2170 cells, and the assumption there is very similar to what Giga Shanghai was going through, just with a bit of a delay. The picture for Giga Texas is also similar, but that factory grows bigger in the later years because that is the HQ. That is by far the largest of all the factories, by far the largest of all the plots. And then I was thinking about Tesla's expansion beyond the existing factories and the whole Robotaxi conversation, and I know that Tesla bulls get mighty excited by Robotaxis, but I am keeping the revenue from Robotaxis within the FSD assumptions. I'll go through those in just a second. What I do think will have to happen at some point organically is Tesla will need to make a compact car. If Tesla really do want to become a dominant player, and as battery tech and everything else improves, they will have to go into the compact class. The Model 3 and the Model Y are all good, but for many people who live in cities, in densely populated areas, and countries in Europe and in Asia, a small runaround car is what those people want. They will not buy a bigger car, even if it is technologically better. They don't need 500 miles of range. They don't need a huge amount of space. I've penciled in a compact car for launch at the very end of 2025 as a result. It doesn't really matter too much in the numbers exactly what will happen, exactly when it will happen. That just seems the most reasonable assumption when you look at where Tesla is moving to selling several million cars per year. This is, in my opinion, the most likely and the most probable direction in which things are going to go. And then below, I have future factories. I've only added 3 more car factories here. Maybe Tesla is going to do more than that in the next 10 years. We'll have to wait and see. And Elon Musk has recently had meetings with the presidents of Indonesia and Brazil. And it just so happens that Indonesia is the world's largest producer of nickel, which is the main raw material for lithium batteries, and Chile, Argentina, and Brazil produce something like a third of the world's lithium, so those 2 locations would make a lot of sense as well. I then added a 3rd factory. I don't know if they're going to build all 3 at the same time, maybe just do 2 like they did with Berlin and Austin, but I provisionally penciled in another East Coast location in the United States. Maybe it'll be in Europe, maybe it'll be somewhere else. And at the bottom here, you can see that I have a grand total of 1.43 million cars produced this year. They could beat that number if Berlin and Austin start ramping up faster later on this year, but that's my current baseline assumption. And then I have 2.3 million cars in 2023, and that is a pretty big jump, but the only reason the number is big is because Texas and Berlin start actually producing meaningful numbers of cars. Giga Shanghai is operating at the new capacity, and Fremont continues doing what they're doing. I only have 250,000 cars for Texas and 325,000 cars for Berlin in 2023. So they're not some kind of crazy numbers. Then we have a big jump in 2024. And again, it looks like it's a really big step. But again, this is only because all 4 of the current factories that they already have will be operating at full capacity in that year. And from late 2025, I have the new factories slowly adding to that production on top of the existing ones increasing their output. And my assumption is that Tesla will hit 10 million cars a year in 10 years' time at the moment, which is roughly where the biggest car manufacturers like Toyota were before the pandemic. So in my opinion, this is not some kind of unreasonable as an assumption. Next, I have insurance assumptions on the next tab here. These are not particularly important because no matter what numbers I throw in there, insurance just never becomes a major contributor to the P&L. Sure, Tesla will make a bit of money on it. They'll make it very easy for you to buy it through the Tesla software, but it isn't really material when you're doing the valuation, especially when you compare it to car sales. Now, I have the supercharger network assumptions in here as well. At the moment, Tesla have about 37,000 superchargers in their network, and that's the average assumption here. As Tesla have been relatively slower growing those numbers recently, I've been pointing that out in my live streams on the results every single time. I have toned down the growth in here a lot. I kept thinking they're going to go and start accelerating, but that isn't happening. So you can see that it does grow, but not all that much compared to car manufacturing or energy. And then I have FSD. My assumption here hasn't really changed. The latest we've heard is that over 100,000 Teslas have FSD currently, and that's about 4% of the total number of Teslas on the road today, so the 2022 figure is about bang on. Now, I know a big chunk of those were outright purchases when you could buy FSD only as a one-off big purchase. I am modeling this as a monthly subscription service because this is what Tesla now sells, and increasingly that is what people are buying, and that I think is where Tesla is going to push a lot more in the future because you want a recurring revenue stream and it's pretty good for business. And I'm placing a bet that FSD will become good enough in about 2 years' time maybe that at least one other car manufacturer, doesn't have to be a big one, will do a deal with Tesla and start selling Tesla's FSD to their customers as a software bolt-on. And I'm presuming that the software will be more expensive for non-Tesla customers as FSD becomes ubiquitous, the kind of default way that people drive, especially on boring journeys. The penetration will get more and more. I have it hitting 50% of all Tesla cars having FSD in 2031, in 10 years' time. I don't know. Some people, I am sure in the comments, will say that that is ridiculously ambitious, and there will be others who are saying that FSD is going to be the only way people will drive in only 2 years' time. So I'm somewhere in between. Next up, let's look at energy. I have tuned down my assumptions on energy a lot in this model. We are seeing the production issues with 4680 cells that are proving it is much harder to ramp than Tesla expected. And Tesla is only just doing deals with Panasonic, LG, and Samsung to start building those factories. It will take years for those factories to be built, then the production in them to ramp, yada yada. So although I still think energy is going to become a big business line for Tesla in the future, probably beyond the time horizon of this model, I have reduced these assumptions significantly. And then I've got the final output. You can see in here that even in 2031, in 10 years' time, in my model, Tesla makes most of their money from, selling cars. I know, I don't understand Tesla. The Tesla bot is coming next year. Tesla is not just a car company. Feel free to go and build your own valuation that does something different. I prefer to look at the most likely scenario because I know no better. In this model, energy has become relatively less important, making up less than 10% of Tesla's business at that point in 10 years' time. And you can see that FSD is adding a fairly decent chunk in here as well, although not quite the sort of level that some other people expect. And using those numbers, I get to a target price of $2,902 to $2,927 using the perpetual growth and EBITDA multiple methods, which is roughly $969 after the 3-to-1 stock split happening later this year. Given the rate of growth, I have my EBITDA multiple set to 22, the same as before. I guess some people might say that's way too high for Tesla in 10 years' time because it's going to be a much more mature company, but if they are still growing relatively fast at that point, which I expect them to be, developing their energy business at that point, maybe the next 10 years will be where that comes to fruition, and potentially working on new products, on new business lines, it doesn't sound too far off to me. But here is an interesting trick for those of you who want to do a little bit of maths. Let's say that you roughly agree with the car numbers in here. You say, yeah, okay, Tesla can make 10 million cars a year in 10 years' time. That's roughly what the other biggest car manufacturers produce, and Tesla is doing pretty well and growing while everybody else is declining, so that kind of makes sense. But I don't think they're going to become a 80 million or 200 million. 10 million makes a lot of sense. And you say, okay, let's assume that prices grow at roughly the rate of inflation, which is what I have in this model, and the margins roughly stay the same. They don't increase, they don't go any kind of crazy numbers, they just do the exact same thing. And then you say, I don't believe in any other business that Tesla does. I don't believe in the energy business. I don't think it'll make any money. I don't think FSD is going to work ever. I don't think insurance or the superchargers are ever going to make any meaningful money. Okay, let's just go and delete all of those lines from the model, but then keep all of the operating costs to make it a little bit conservative, if you like. That still gives my valuation a 2,000 pre-split target, which will be $670 after the stock split. So my view is that even at $842 that Tesla is trading at today, there is still a ridiculous 245% upside in my model, and that is why Tesla is the biggest position in my personal portfolio. If you found this video useful, please don't forget to smash the like button for the YouTube algorithm. Thank you so much for watching, I really appreciate it, and as always, I'll see you guys later.